Hello and welcome to TV Barbados. Today we are going to look at CSEC Principles of Accounts, and we are going to be doing an income statement question based on end of period adjustments. So just to remind you, the income statement has two parts. The first is the trading account that reveals if the entity made any profits from its goods in trade. In other words, we're looking for the gross profit. And secondly, the profit and loss, or profit or loss, which is more correct, which will reveal if the entity made any profit after it deducted the expenses incurred during that period of running the business to make that gross profit. All right, so this is the question. Those of you who know to do the income statement, you can pause the video and you can do it. Those of you who don't know, well, you can continue with the video, and perhaps when it's over, you could come back and try and see if you can do it all on your own. All right? Okay, so I assume that you have done the question, or you're waiting for me to continue with the question. Good. So I have my statement set up. The Gianna Polo store income statement for the year ended September 30th, 2024. I have my steps laid out. So let's tackle these end of period adjustments and produce this income statement. All right, so the first step would be to calculate the net sales. Net sales is sales less returns. All right, so let's do that. Sales less returns. So we're going to enter the sales figure. So that's 465,900. And we're going to take away the returns. So to remember, return being in the opposite column to sales. And that gives us our net sales. Good, so that is step one. Step two, which I'm going to do in two parts. First, I'm going to calculate the goods available. And recall, goods available is simply opening inventory plus net purchases. So I'm putting the opening inventory figure, which is given here as 70,400. And I am going to adjust this purchase figure, which is given currently as 254,800, but there is some carriage and there are some returns, so I'm going to adjust it so I can get the net figure. All right, so I'm going to add the carriage and take out the returns. So those returns, good. So I've adjusted got the net purchases figure. So now my goods available, 325,710. The second part of that step two is to then take away the closing inventory from the goods available. So let's do that. Closing inventory is January, the first note in the additional information. So let's put that highlight there. And we're going to take away that closing inventory of 45780. Good. So now we have our net profit as 279,930. Sorry, that's our cost of goods sold. It's 279,930. Gross profit, which is step 3, is to take away the cost of the goods sold from the net sales. And there we have it, our gross profit, 183,860. All right, so step 4 now says, well, add on any other incomes that the company may have received other than from selling its goods. All right, so what other things do we have? We have discount received and we have commission received. So let's enter those two. The discount received, which is obviously in the credit column because it's income. and the commission received $2,000. So the total income $187,210. Now we come to the part where all the additional information has to be used at this stage. All right, and this is to find the total expenses. So we're going to list all of them, make the adjustments, and then take away the total. All right, good. Sorry about that. So I've listed all the expenses already, and I've put in the ones that are not being impacted by the adjustments. So now I will just work on the adjustments. Good. So I'm just going to bring the adjustments so we can see them clearly. Good. So the first adjustment here says the insurance premium is $250 per month. So if it's $250 per month, right, that would suggest then that 250 by 12 is $3,000. So the figure that should be here is $3,000. But when I look in the incomes in the trial balance, I see that I only paid $2,500. So that would suggest that we owe an additional $500. All right, and that obviously will go over to the balance sheet in due process. So that is note number 2. So let's go to the third one. It says a bad debt of $400 was written off. So I can enter that because bad debts become expenses. So I can write that there. The fourth one says rent paid covers the period down to December the 31st. But we are only going to September, so that will leave us with October, November, December, 3 additional months. So I have to find out how much I actually paid for the whole year and remove the piece that does not cover the year in which I am in. That is the extra 3 months. Good, so I got to take that 8,700 divided by 15 and multiply by 12 to get the amount that I paid for the year, which is $69.60. And therefore, that would suggest then that of that 8,700, 1,740 is prepaid. All right, that would also appear on the balance sheet. What else do we have? We have more expenses still outstanding at the end of the year. So if they're still outstanding, it simply means that we need to add them on because we got to cover all the expenses that occur in the period in which we are writing. So far I have here that we only paid 1,490. So I have to add on that 210 to get the correct figure for this year. So totals are together 1,700. All right. Then we have what? That the motor vehicle are depreciated on the book value. So what is book value? Book value is cost minus depreciation. So clearly, I got to get the cost figure, which is 95,000, take away all the depreciation that exists on that vehicle, so which is 25,000, and that will give me that the book value is 70,000. Therefore, I'm going to find 12% of this 70,000. And 12% of 70,000, 12% of 70,000 is how much? 84? 84. Thank you. All right. Then next one says that the equipment is depreciated at 20% on cost. So on cost means I just take the cost figure and find the 20%. So the cost figure for that equipment is 4,500,000, sorry. And I am going to find 20% of that. So 20% of that, multiply that by 2. So that should be 9,000. Okay. So I have one more. It says the provision for doubtful debt is 3% of the opening account receivable. So I look for the opening account receivable, which is written as 38,100, and I will find 3% of that, right? And 3% of that number, how much is 3% of this 3,100? 1,143. Okay, that's correct. All right, good. Okay, so that tells me then, so let's make sure that we cover all the things out here. So this is number 8. The vehicle was number 6. The equipment was number 7. Who else? The rent was number 4. The bad debt, number 3, good. I'm missing somebody. More the expenses was number 5. Good, so I've covered all 8. So that means I'm good to go. So my total expenses 80,413. So the last step number 6, is to take away the total expenses from the total income. So the two numbers are in line with each other. This is total income, this is total expenses. Just subtract, and I got that my net profit is 106.97, 797. All right, so that is it. Let me just put in the lines. All right, so I think I have all my lines in. Everything looking neat and tidy. All right, let me just give you back my answer area again so you can see clearly my answer area. Let's get a nice little color. So there you go. That's the income statement for the D. Giannapoulou question. So I hope you were successful in applying all those things. They're all highlighted here in the bluish color. So you can keep practicing. Make sure you apply your adjustments and show you're working. Well, I'm going to see you shortly when we do the balance sheet to this question. Keep practicing.